Hey, I'm Gene Goldman, and today is Monday, October 3rd. Here's a look at the week ahead. Well, last week we released our fourth quarter market outlook. Please contact your Cetera professional for a copy, or you can get a copy here on Twitter at CeteraIM. One thing we talk about in our outlook is that Fed policy creates a potential error which could lead to an economic recession. And I want to remind you, our base case is that if we have a recession, we expect it to be mild for three reasons: strong labor market, the fact that it could be a potential rolling recession, not a sharp recession, and the fact that housing comes from a very strong foundation. We don't see housing suffering like it did back in 2008. With all this said, our topic today is a different kind of recession. It's an earnings recession. So first of all, what is an earnings recession? This is when earnings fall year over year, 2 quarters in a row. And we're watching this very carefully because third quarter ended this past Friday. So therefore, earnings for the quarter will be coming in very soon. Second of all, what do we expect? Well, according to FactSet, earnings growth is expected to rise 2.9% year over year for the quarter. This would mark the lowest year over year earnings growth since the third quarter of 2020, when earnings actually fell 5.7% year over year. And with the combination of a pullback on the Fed raising rates, possible economic recession, stronger dollar, we've seen earnings estimates for the quarter actually be revised much lower. So back on June 30th, for the third quarter, the market expected earnings to rise 9.8%. Now they expect, as I mentioned earlier, earnings are expected to rise just 2.9%. And overall, this decline, this pullback in earnings estimate is much larger than normal. It's greater than the 5-year, 10-year, 15-year, and even 20-year averages. So with all this said, any good news about earnings? The answer is yes. Two things. Number one, valuations are much more attractive than we've seen in a long time, as you see here in this chart. And second of all, since earnings estimates have been revised down, this makes upside surprises more easily obtainable. Our overall takeaway, our big takeaway, is that markets are watching earnings. If you go back to Investing 101, earnings drive stock prices. So the next few weeks are going to be very, very key for market direction. Thank you for listening. For more information, please follow us on Twitter at CeteraIM, and I'll see you next week, and thank you.